Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, finally I'm back from the 2 days vacation, and after coming from the vacation, when I looked at the chart of gold USD, to be honest, I was not getting a clear vibe, because as we can clearly see on the chart that right now market is squeezing, the chart is squeezing and heading towards a narrow channel. Okay, so overall the things are not very clear right now. So as a result, I had to take the help of the COT report again, and I saw that the institutions are mostly long. Okay, you can clearly see that 75% institutions have taken long position, and if we look at the futures data, then you can see that number of contracts that are long right now is 237,891. 2,37,891 contracts have taken long position, and 79,286 have taken short position. So you can see that there's a big difference between the long position and short position. So as a result, the market sentiment can be considered as still bullish. So this is the chart of gold right now. Before I proceed with the chart, I would like to talk about DXY. We can see that after making a high of 103.35, DXY is heading for a correction right now. And if the same correction continues, then the next stop for DXY is 102.20 to 102.10. This is the stop for DXY, and I think that DXY will try to bounce again from this particular level on the chart. And if we look at the chart of US bond, then as expected, US bond is going for a big recovery. As we have already discussed in our previous videos also, that bond market will try to recover, because here bond broke the previous high, and I think bond market will try to break the previous high again so that it can continue the upward move again. But it will take some time. Maybe we will get to see this kind of move by next week. But overall, I'm thinking and I'm hoping that we will get to see some recovery, good recovery on the chart of bond in the coming days and weeks. You can see that gold prices slip as banking contagion fears ease. Gold prices are a tad lower in early Asian trade as financial sector jitters ease. Fears of a banking contagion spilling over seem to have calmed following First Citizens' partial takeover of the collapsed Silicon Valley Bank over the weekend. So more or less the market is calming down. So I think that we will get to see a normal market move in the next coming days, because for the last couple of days and weeks market was extremely unpredictable. In fact, market was behaving abnormally in each and every session. So as a result, things were very critical for us, but hopefully things are heading towards normalcy and we will be able to trade again normally like we used to do the previous times. Now enough talking about bond, gold, COT. Now let's talk about the chart of gold. So as we can clearly see that we have a line at the top and we also have a trend line at the bottom. Both are acting as support and resistance, but you can see that the market is squeezing. Market is heading towards a narrow channel, and whenever you get a scenario like this, then there is a big possibility that in the coming days market will be giving us a big move. It can be a big breakout, or it can be a big breakdown as well. But in case actually in this type of scenario, usually the breakout comes towards the upside only, and the reason is that market usually prefers to break towards the trend of the market. Right now we can clearly see that the trend of the market is towards the upside. So by next week or maybe after a few days, there's a possibility that market may continue the trend again. by giving us a big up move. Okay, because we can see the market is heading towards a narrow channel. Till then, this is the dynamic resistance and this is the dynamic support. So if market falls, okay, if market falls during the day, listen to me carefully. If market falls during the day, observe the volatility of the market first. We have first support around 1959 to 1958. 1959 to 1958 as the first support for day traders. Listen to me carefully. This is the first support for day traders, not for swing traders or positional traders. This is a minor support. If the volatility of the market remains like this, you can see that right now market is not very volatile. Market is giving small candles. So if the volatility of the market remains like this, then you can expect the 1959-58 to act as support. If market takes support and shows a little bit of bounce, shows price rejection from below, you can go for a buy. You can expect a profit of 30, 40 or 50 pips. Okay, because 1959-58 seems to be a proper support for on the chart for day traders at least. And if market shows volatility during the European or US session, because I'm recording this video in the Asian session, so in case market shows volatility during the European and US session and breaks this level, then your next support will be around the trend line. Okay, the number will be around 1952 to 1953. This is the next level on the chart of gold. So for day traders, you have two levels. If market starts coming down, 1959-58 and 1952-53, these are the two levels. Okay, and in case market shows a big drop during the US session, then you can see that we have a proper support around 1934. So this is a level where not only day traders, the traders who prefers to hold their position overnight, 1 or 2 days, they can also take a position. 1934-35 is a proper level on the chart, and in this market condition, market should take support around 1934-35 level. Okay, the strongest support on the chart of gold is around 1910, but the 1910 level is very far away. So let's skip this part and concentrate on this particular portion of the chart. So we have two supports. This 1959-58 for day traders. This is a weak support. If the volatility remains low, then you can expect a temporary bounce only. Okay, and in case market breaks this level due to volatility, then your support will be around 1952-53 level. If market takes support and bounces, you can go for a buy. And the next or the strongest support on the chart of gold is around 1934-35 level. Similarly, if we have a level around 1981 level, around here, you can see that we have a resistance for day traders. Okay, this is a typical resistance for day traders. If market hits the level, you can expect a not reversal. Okay, you can expect a minor selling pressure for 30-40 pips. Okay, this is a quick entry and exit level. It can be a quick entry and exit trade. Okay, if you are an experienced trader, if you know to handle, if you can handle this kind of quick entry and exit trades, then you can look for a sell position around 1981 level, because we have a resistance around 1981 level. The reason behind considering this as a quick entry and exit trade is that overall the trend of the market is bullish, and this is a trade against the trend of the market, so it can be a little bit dangerous as well. And the next resistance is around the trend line at the top, but that level is far away. Okay, so this is the overall market condition and the levels where you can find trading opportunities for the day. If I have missed anything, let me know in the comment section. I would love to learn. Okay, so that's all. Follow proper risk management. I'm also a trader like you, so I can be wrong as well. So do not gamble with your hard-earned money. Bye bye, take care.